The average property in the UK now costs around 9 times the typical salary, and in many areas it's even higher. As you can see from this graph, the last time homes were this expensive compared to wages was 1876, nearly 150 years ago. Back then, most property was controlled by autocrats, the Crown, and elite institutions. Around 90% of people rented, and more than 70% of household income went on just food. In other words, for ordinary families, ownership was almost impossible. Then came what many call the golden age of the middle class. After World War II, governments were determined to avoid another depression. They embraced what became known as the Keynesian consensus. The logic was simple. In a recession, the state spends to keep the economy alive on infrastructure, homes, hospitals, and jobs. In boom times, higher taxes, especially on the wealthy, were meant to slow inflation and build a buffer for the next downturn. That system rested on 4 pillars: high taxes on the wealthy, strong trade unions giving workforce more power, strict regulation on banks and finance, giving capital less power, and huge investment in public services from the NHS to council housing. This wasn't communism, it was capitalism with guardrails, and it worked. Productivity gains were shared, inequality fell, and the middle class expanded. From the 1950s to the 1970s, the UK enjoyed some of the strongest growth rates in modern history. But by the 1970s, cracks appeared. Inflation, oil shocks, and debt crisis. So the old model gave way to a new philosophy, neoliberalism. Free markets, deregulation, and cuts to public spending became the new consensus. And I appreciate I've perhaps oversimplified all that, and there is huge debate on which economic framework is better or worse. Feel free to share your thoughts below. But here's what most economists agree on. The Keynesian period produced lower inequality and broader wealth distribution. The neoliberal period has reversed that. Wealth and income are increasingly concentrated at the top. Over the last 30 years, we've started drifting back towards something resembling the 1800s. Widening inequality, asset inflation, and a growing share of national wealth tied up in property, often in the hands of global investors. That is a growing problem. Owning a home in Britain once felt like an achievable milestone. Today, for millions, it feels like a dream slipping further away every year. And I want to encourage you to think why that is. What's gone wrong? This isn't just a housing crisis anymore. It's an economic time bomb, one that could shake not just the UK, but the global economy. And history shows us something important. When inequality widens and ownership collapses, entire systems can be put at risk. We've seen empires rise and fall before. Just study this graph. So the question is, are we repeating the cycle? Let's talk about the mortgage shock. As of March 2025, the average UK home is valued at £271,000. In London, more than £550,000. That might be manageable if interest rates were low. But the Bank of England raised rates from 0.1% in 2021 to 5.25% by mid-2023. The current bank rate is 4%, with inflation running at 3.8%. Thousands of homeowners who fixed during the pandemic at 1% to 2% suddenly faced renewals at 5% or more. A mortgage that was £900 jumped to £1,400 or higher. For many families, that shock was unsustainable. So what's happened? Affordability is stretching, with 35% of adults reported finding it very or somewhat difficult to afford their rent or mortgage payments. Mortgage arrears are creeping up. Repossessions are rising, and the fear is this could be just the beginning, because when large numbers of households can't meet repayments, the financial system starts to strain and cracks can spread fast. And what's not helping in all of this is the rise of corporate landlords that are capitalising on the situation. As ordinary buyers struggle, new players are starting to take over more and more, corporate landlords. We're not just talking about small buy-to-let investors. These are banks, pension funds, and asset managers with billions in capital to deploy. In 2024, reports showed Lloyds banking group targeting 50,000 rental homes by 2030. Legal & General has moved into build to rent, aiming for thousands of units annually. Grainger already manages over 10,000 rental properties. And global giants like BlackRock have been linked to large-scale acquisitions in UK housing. Why? Because housing is a safe bet. People might cut back on luxuries in a recession, but they'll always need a roof over their heads, food in their bellies. And here's the problem. Corporations buying in bulk can outbid ordinary buyers. They pay cash, buy whole developments, and benefit from tax structures and cheaper access to capital money individuals can't access. And the shocking thing is they pay less stamp duty. If you buy 6 or more residential properties in one transaction, you qualify for stamp duty rates on the right here, which is far less, whereas on the left you can see the usual stamp duty you or I would pay. So as the market shifts, fewer homes available to buy, more held as permanent rental stock. For investors, it's steady returns. For families, it's another barrier to ownership that's also inflating prices. There is also a huge generational divide with all of this. In 1997, around 58% of 25 to 34-year-olds owned their own home. By 2020, that number had collapsed to 38%. Meanwhile, baby boomers own a vast share of UK housing wealth. They bought when homes were 3 or 4 times income and rode the wave up. Today, young buyers face ratios of 8, 9, even 12 times income when buying a home. That gap explains why millennials and Gen Zers are sometimes called Generation Rent. It's not just a delay in buying. For many, ownership may never happen. And if housing becomes permanently unaffordable, the knock-on effects are huge. It delays families, weakens communities, and it erodes into generational wealth transfer. So how did we get here? In the 1980s, Margaret Thatcher's right to buy sold off millions of council homes, but local authorities weren't allowed to replace them. Supply of affordable housing on the back of that collapsed. This was the start of neoliberalism. Free markets, deregulation, and cuts to public spending became the new consensus. By the mid-90s, new council house home building had dropped from 120,000 units a year in the 70s to just 1,400. Labour governments in the late 90s and 2000s doubled down on financialisation, encouraging the buy-to-let boom. Tax breaks and easy credit turned homes into speculative assets. The result from all of this was simple. House building slowed, investment demand soared, and prices rose far faster than wages. So why call this a time bomb? Because housing isn't just bricks and mortar, it's the backbone of Britain's economy. When prices rise, people feel wealthier, borrow more, and spend more. When prices fall, the opposite happens. Wealth contracts, banks wobble, and the whole economy slows down. If house prices drop 20%, which some economists say is possible, perhaps adjusted for inflation, it has already happened, it could wipe billions from household wealth, strain the banks, and hit pensions invested in property funds. And renters wouldn't be spared. If landlords panic sell, rental supply shrinks, pushing rents even higher in the short term, which we've been seeing. That's why this isn't just a housing issue, it's an economic and political fault line. So what happens next? Governments will face impossible choices. Do they increase taxes and risk stalling the economy and becoming unpopular? Drop taxes and fall further into debt? Prop up house prices to protect wealth? Or finally, allow correction, making homes affordable again, but at huge political cost? Every option has consequences. Support homeowners too much and renters revolt. Do nothing and a crash could spiral into recession. That's why Britain's housing market is more than just a crisis. It's a system-wide gamble, and the countdown has already started. So, in conclusion, when people ask why is Britain's housing market broken, it's not just greedy landlords, it's not just supply and demand, it's decades of policy, corporate takeover, and a money system that inflates assets faster than wages. That's why Britain's housing market isn't just expensive, it's a time bomb. What do you think to all of this? Is Britain headed for a crash, or will governments and banks do whatever it takes to keep prices propped up? Drop your thoughts below. I read every single one. I learn a lot from your comments. And if you want more truth about the housing market, not just the spin, hit subscribe, share this video, because the more people who understand this, the harder it is to ignore.